Everybody's talking about the 99% mortgage. Now, what does that mean? Now, the 99% mortgage means you only need 1% of the deposit. So, for example, if a property is worth £500,000, £500,000, you'd have normally have to put down either £50,000 as the 10% or £25,000 as 5%. But now you only have to put down 1%. And as everybody knows, 1% of 500,000 is 5,000. Now that obviously makes a big difference when you're actually looking. So that's one of the criteria, that you need a 1% deposit. The other criteria is the deposit is a minimum of 5,000. So even if you were buying a property for say 200,000, and you'd say, okay, I only need 2,000 as the deposit, unfortunately you'd still need 5,000 because 5,000 is the minimum. The other thing to consider is you need to be able to afford the 99%. So a lot of the time when you're applying for a mortgage, they'll obviously look at what you earn and your credit, and then look at the mortgage calculator and come up with how much you can borrow. And sometimes if it falls short, say for example it's only 250,000 because of your salary, you can normally make it up with the deposit. But if you only need a 1% deposit, then your affordability needs to be a lot higher in order to make up that 99%. I'll put an illustration in so you can actually see the figures. The next thing to consider is the interest rates on 99% mortgages are a lot higher. The criteria is a lot stricter. For example, lenders out there don't do it for flats, some of them it just has to be a house. So you've got a higher interest rate, some only do it for houses. The other thing to consider is negative equity. So if you buy a property and you owe 99% of it and you only have the 1% deposit and the property price goes down, then you're in what's called negative equity. That's where you owe the money to the bank. The money you owe to the bank, I should say, is a lot higher than what the property is worth. So this is obviously a major concern. But if you've got a higher deposit, then it doesn't matter as much if the property goes down. For example, if you've got a 10% deposit and the property price goes down by 5%, then you've still got a 5% buffer. So that's also something to consider. So there are pros, as I said, with you not having to save as much of a deposit, getting on the property ladder a little bit quicker. And obviously if the property appreciates, then increases in price, which they do, on average, properties do tend to increase in value every 10 years. But there is a ceiling, which quite a lot of people say. So that's something to bear in mind. But if you've got any questions about it, by all means, put the questions in the comments and I'll get back to you. If you'd like any more videos about first-time buyers and what kind of options they are, please feel free to subscribe, and I'll also put in a link of other videos. I'll be starting a video series which will have other options for first-time buyer mortgages.